All right, we're back. And hopefully it works this time because I recorded this yesterday and audio didn't work. So hopefully it's working today. We have a little bit of benefit of now today playing out on Friday. So I'll just wanted to go over an update. If you don't know who I am, I'm Ben Collins. I'm the CFA charter holder and Chief Investment Officer of Options Autopilot, which is an automated options trading platform. If you want more information on that, just check the description and you can try it for a month for $45. And I basically wanted to do just a general update on the portfolio, but also cover, Intel, which has been actually now a pretty big winner. And, just update how I'm approaching these positions in general, because I don't necessarily hear people talk about these types of things. So if you appreciate that, give it a like, subscribe, because I'm just kind of posting my progress and how I'm using both automation and some manual trades and going over the benefits and the downsides of both, which we'll cover today. So try and make it a little bit faster, but every time I say that, it doesn't necessarily go that quickly. So let's just dive into the current portfolio. We can see this is my TastyTrade setup. Yesterday was up obviously quite a bit with Intel, but now we've pulled back today, and I'm going to go over my current positioning there, how I'm potentially going to change it versus what it is now, and how I basically profited in general. But let's kind of go into this position because SOFI is actually quite a big one that we're going to cover as well. So had my video kind of posted yesterday. Obviously, Intel was up huge from the announcement of NVDA, I guess, investing $5 billion into their platform / development of chips. In my opinion, $5 billion from NVIDIA, while that's nice, it seems just kind of a gesture. And I was kind of talking about that where, when this gapped up, I kind of sold out of my calls that I had. I had actually added to my position, which I'll show you. I had 10 contracts, and then this broke here. I already had this line in place, and I added 4 contracts because if you recall, my whole thing is, I'm only adding over at certain levels, and if it's, getting up, I'm more profitable. So it finally was gaining some profit, so I added to my position expecting a breakout. Obviously, I didn't necessarily expect this type of move. This was welcomed, but in general, I think this is maybe, I think it's positive in general for Intel, but I think it's maybe more positive for NVIDIA. So we will see how this plays out. It gapped up and then it had basically faded off throughout the day, which is not necessarily a positive move, and now it's kind of continued to pull back. What a lot of people will say is, gaps are made to be filled. That's what I tell my girlfriend, but she doesn't really like that. And you can see it might pull back down to this, maybe this recent peak, maybe a couple touches here around the $26, $27 level. I don't know if it'll pull back that far, but we will definitely see. The only thing I'll say about this and why I'm staying mostly bullish on the position is, they're saying the government had nothing to do with this, but I would assume that they want to show that they are smart individuals by making sure that their positions are profitable in the long term. So I do think there could be even more positive kind of news flow happening from the Intel and maybe the government. We will see, because they definitely want to back this company in general, I would say. Who knows? I'm just telling it like it is. I don't necessarily think it's good for the government to get involved for no reason, but at the same time, we trade the market that we have, not the one that we want, and we definitely want to try and benefit from what might happen, but we always have to manage risk. So that's the scenario. Let's go to TastyTrade. Changed all the stuff on how they do this, but if we go to year to date, we can see I'm up significantly more now, 25,442. Obviously, again, with free fees, which is insane to think that they've taken $1,740 of my money in fees, but profit and loss with fees, 23,701. This is on Again, it's changed throughout time. This is on right now, it's 67,000. I've kind of pulled some money out, put it in at times. I'd say on average, it's averaged around $50,000. So not quite a 50% return, but I'd have to do a money weighted calculation, which I don't think is worth it at this point. You get the general idea. So if we go to Intel, we will see now that the realized gain, so the one that gapped up, was $7,500. It was a 91% return, almost happened all in one day, because I did add to it on the 16th of September. If we go to transactions, and they changed all this in general on me. So let's go to here. 7 days. Here we go. I think we could make this a little more friendly, but you can see I bought the additional 4 right here on the 16th. Again, I was just following my plan. If you've heard me talk about it, I've given that level before and said, if it confirms. I originally talked about doubling a position, but I wanted to leg in because it wasn't up a lot from a profit standpoint. So I just bought 4 additional. I bought my previous ones, I think it was July 10th. Because I could have just done that in the first place. So yeah, July 10th is when I bought just the straight up 30 strike calls, $5.40. So I had a $5,400 position, added approximately $3,000 to it, and then sold it all out at $10.55. So I weighted average calculated this. It's a 91.1% return approximately. So not bad. And so far it's kind of played out in my favor that I sold. But now my plan is, and what I wanted to go over, how I'm going to approach it, because I still want to be long the position and I'm kind of going to leg back in. But I'm trying to, again, create convexity without just buying straight up calls, right? Because this can kind of happen and eliminate a lot of what you gained here. So currently I'm selling puts. I guess it's easier to go like this. I'm selling puts. Maybe I was a little bit aggressive here, a little premature to be selling the 27 strike, 15 contracts. I think this was closer though to when the stock was at 31-ish. So now it's pulled back a decent amount from there, and even into the close yesterday it was pulling back. So you can see I'm not necessarily down a huge amount compared to my profit, but it could get a lot more fairly quickly, because now we're kind of approaching at the money, because now it's down to 29.55. So again, I'm fine getting assigned. That's why I kind of did that. And then I bought these 5 calls, even farther, longer dated, 30 strike again, just to kind of be similar. So before I sold the calls, my exposure was approximately almost 1,000 shares effectively. And you can see the combination of these two is still almost 800 shares, but the convexity should be a lot better. In terms of, now I can basically have it drop to, I think, 25.55 and still be break even here. If I get assigned, maybe I won't take assignment, just depends. I'm just kind of letting it play out, and then I can still benefit from some upside. But my plan is still to basically, and I'll go over this on specifically on SOFI as well, because that's even bigger gain. I just want to highlight this to people who are noticing or kind of learning over time. One of the reasons I did this and went farther out, you can see implied volatility is even lower. It's actually the lowest. Sometimes that's the case, sometimes it's not, but you can see it's 5%, almost 5%, I guess, 4% lower than what I was previously. So I just figured it would maybe be better. That can be skewed by the bid-ask spread, makes it appear lower than it is. But in general, I just figured, okay, I'm gaining more time. I'm trying to basically have a long-term position here. So my plan moving forward is I probably won't sell any more puts. If it pulls all the way back down, I might sell maybe 10 additional puts, still on probably the 25 strike. So I don't want to go too crazy in terms of size on that, because it holds in margin whatever I can get assigned, and I don't necessarily want to negate my entire profit if for some reason it continues to fall and pull back. So my thought is I'm kind of trying to help finance now this new long position, and I'm already working with approximately almost $7,000 in profit on this position. So as of right now, I have about a $4,500 of straight up call premium in the future. It's at the money. So my thought is, my break even 2.5 years out is $9, so $39 basically. So do I think that it will be higher than $39 in 2.5 years? Personally, I do. I think there's a lot of good development that can happen, because like I mentioned before, I mean, if we zoom way out and we can see it could go back to 65, right? I think it's got a long way to go for that to actually happen. But this is kind of now the start of the play and hopefully the resumption of an uptrend. I think that this technical kind of bottom has now realized almost right here. Because if we recall, this distance is usually like the distance it projects initially, if you follow technical analysis. But in general, I'm kind of wanting it to get back to maybe this high, which would be 50. Who knows how long that would take? I think it'd be really have to be hitting home runs or coming back to break to new highs above that in this time period. So my thought process, I'm probably going to be buying call spreads or turning this into spreads. And the reason is, if we look at this and say my break even is at $39, if I wanted to triple my money in 2.5 years, the price would have to effectively go back to 60 or go close to those highs, right? Now that's a lot less likely than maybe it going from 30 to 40, right? So if I basically, we'll do this as an example. If I went like this, and then I'm selling the 40, we can see right here that I'm paying 288. My potential profit is 712. So again, not quite 3x. I think I would probably go a little bit farther out, so 35 to 40 or 35 to 45 if I was going to do that. So let's look at that. Again, I'm just trying to help educate and talk through how I approach these things. I'm not saying you should do this. This is just how I think. So again, right here, we could see if we were pretty confident that we wanted to, that it was going to get to 45 in 2.5 years, and we bought the call spread and just want to let it go. It's costing me $2.25, and it can go to $7.75. So again, it can expand from $2.25 to $10. So it's tripling your money there, but it's requiring a much lower, a lower amount of a move to 45 versus 60. So that's the thesis there as to why I would potentially be okay doing a call spread. In general, it's annoying to cap your upside, but since we kind of already got that pretty big pop, and I was already long just straight calls, now I would potentially pivot that into a call spread. And if we look at SOFI, is a similar situation. And of course, this is how it works, is that I had some calls, I ended up selling them and wanting to do a similar thing, hoping it's not a strategy, but like kind of thinking there might be a little bit of a pullback here, and then I can do a similar thing where I'm selling puts, buying call spread. But of course, it just keeps popping, right? And I don't exactly know the news, but it does seem to be on decent volume and fairly favorable. So I think financials are hitting new highs, and this is likely to benefit as well. And this is, these are all-time highs. So usually if it's making new highs, it's going to continue. It doesn't mean there can't be pullbacks. But in general, I'm taking a similar approach where I'm selling puts, but I'm doing it a little bit differently where, again, I was long about effective shares previously on SOFI. Now I'm only at 412 shares. So again, I have lower exposure, which of course it's popping the most. But I'm staggering my strikes here, and the reason is that I kind of want to potentially get assigned and buy some stock if it gets down to these levels. You can see I've sold 20 contracts, and then I sold fewer, but you're getting more premium, but I sold fewer because they're closer to at the money. And if I did get assigned, I'd only be long 400 shares. So if it kept going, I wouldn't be giving up my entire profit basically. Versus here, if it gets all the way down here and I get assigned, and that's another 2,000 shares, I've made $14,000 on SOFI so far year to date, but that will potentially get eroded. But I do have a little more cushion, right? I can go down another $7 if I have 2,000 shares, right? I'm likely going to add to my short puts here if it pulls back, or just kind of consistently add it over the weeks. There will be earnings that it has to go through, but in general, my thesis is, the 25 level that it broke out from should be now new support. So I'm kind of making that bet in general that this trend is basically going to continue, and this should be new support, and all the positive news that's pushing it higher now will not get negated by earnings. If that's the case, then I should be able to make a decent profit. What's interesting, again, my thought process here and why I'm approaching it this way, you can see that you're actually getting a really good return on your risk. So this is what I chose. Let's say we can show again here that if I sold this put, and if I sold, let's bring it up to 10 just to make it easy for showing. So if I sell 10 contracts, we can see my max profit is 870, but I'm only having to use $2,215 in margin. So this was, when I sold it originally, it was like $1. So it was like a 1 to 2. So it's basically a 50% return on my margin risk for selling these puts for a 91-day put, right? Again, the reason that that's the case is you have to hold it through in earnings. But that's a pretty high return, and I'm kind of just trying to press my bets, for lack of a better term. So I'm up 14,000 on SOFI. So what I want to do is I'm assuming this continues, right? I don't necessarily want to lose this entire amount, but this is effectively not free money, but it's profit. It's not my original capital. I probably won't risk the whole thing, but let's imagine I wanted to use all this in margin. I could technically be earning $7,000 on 14,000 of profit. Now that's not the only thing that's at risk, so you got to be extremely careful. That's why I wouldn't do that. But ultimately I can earn a decent return, and like I was pointing out, if it got to 20, basically if it got to all the way down to $15, how I'm currently set up, or $16, then I will have given up all my gains. I think that's extremely unlikely to happen. So that's where I'm kind of okay selling here, and I still think that these would be decent places to buy the stock. So that's my thought process there. And then on the upside, again, kind of pressing my bets would be similar to how I'm approaching with Intel, is that I could buy a call spread, or make the bet that instead of it going from $30 to $100, I'm making a bet that it would go from 35 to 40. And if I did that, this is just an example, it's not exactly what I'm doing, but it cost me $1.27 for the spread, and it could increase up to $5, which would be a $373 profit. So it's approximately a 3x on your spread amount. So if I really wanted to, and I might do it, stay tuned, so subscribe, I might take a majority of that profit and buy a long dated call spread, because again, over time, I'm thinking the trend is up and I can be selling puts under the market. Again, if you over lever one way and the market goes against you or the position goes against you, then that's tough, and you typically don't want that kind of volatility in your profit and loss. That's where this can get annoying. I mean, these have started to work out. RIVN is another one that I was hoping was actually going to pop, but it so far hasn't in general. But, this is, if we're getting these kind of wins, I kind of want to take this and kind of reposition to try and change the convexity so it's less like directional stock only, and then get more of the upside, because like I said, usually if it's making new highs, there's a reason, both fundamentally and technically, and it's likely to continue over time. So that's kind of the bet that I'm making here, and why I've kind of closed out, reset my level of profit, because now I'm up 25,000 approximately, and I can kind of work with that and psychologically feel like I'm working with profit there. I mean, in general, I could just use that 25 and put it all in automation and earn on that, which I'll do with part of the money, but I'll go over that separately. RIVN is a frustration. I've been pretty disciplined on only adding when it has gotten over my level. In general, it looked like that was happening yesterday. It was over this line enough to where it seemed like it would close there. But this is another lesson that you always want to wait for the close. I actually added to my position on the assumption that it would be confirming this breakout, but it did not. It pulled back, and now we can kind of see that it's pulled back today. Again, I didn't add huge because I was only up about $1,100, but I did again add about 4 contracts on this one to the position. So ultimately, that is how I'm approaching it. I'm not going to add any more until I get up on this position in general. So that is my thought process there. And if I'm lucky enough to have a similar kind of scenario with Intel and SOFI, I will probably do a similar strategy of kind of again making it convex again, selling puts and buying a call spread, long dated. Because if I, over the 2.5 years, if I basically use that kind of free money, and then I can lever that and triple that, that's huge, and that's a good way to accumulate wealth over time. But again, as people say, it's hard to make money on individual positions, and this is maybe some evidence as to why it doesn't always happen this way. These went against me for quite a long period of time, but I was disciplined enough to not add until it was actually making me money. So just take away the lesson there from a risk management standpoint, where it's not like stock. You don't want to be adding like dollar cost averaging when you're long options. I would recommend only adding to long options if you are up money, right? So if you have profit. In general, that's pretty much the big update. XRP, that's another scenario where it kind of seems like it wants to start moving up again, but I haven't added to that position because, again, I'm not up any money since I put it back in. Let me just bring it up here. Wish they gave me a few more tickers. So we can see it's literally been struggling to get over this $3 level. Almost seems like it's an inverse head and shoulders. If it can confirm here, I think that would mean the resumption of the trend. Who knows? I'm still down, but I'm not going to add until it's a fairly convincing break above this level. The way that crypto seems to work is if it does confirm, it's probably going to shoot up, and I won't be able to add until it's popped. But again, trying to be disciplined, add it that way. I made a big change on the automation side, and I also want to point out, automation, you can see I'm actually down quite a bit, and this is from manually adding in the call side. So this is just going back to the point that you probably don't ever want to do the call side, and this is why iron condors are hard to manage, because you keep getting pressed to the upside, because 2/3 of the time the market goes up, and it can just be relentless, even if you're like, well, why is it going up, right? So I was feeling like I was leaning too long because I had those other positions on, and so I kind of wanted to do a little bit of a hedge. So I put on call 111s, and we can basically see that those ones are losing me money, and actually they're losing me more than this is showing, because I closed down and rolled out the higher call to be less negative, I guess, on the effective delta here, because I was kind of too short. And when you're short the market and the market's going up, and then your individual long positions are not going up, that's when you get the basis risk, and you're getting hit on both sides. So these have worked out, but they weren't always working out that way. This did, so you can kind of see P&L on automation has not moved a ton. I did have an ES 111 close, but you can see that I've disabled the 111 on ES. And I just have this one open, so it's sitting at a profit, but it's not at the target yet, so I'm just going to let it go. But the big change, and again, this is because I'm up, and I kind of talked about this before. If I got up to 20 or 25, I was going to switch and go more frequent on MES. Again, MES is less liquid, but now you can see, based on my options autopilot automations, I have switched it to basically doing an MES 111 every day, but it's a different days to expiration in time. So, and then I also have one that's going every day of the week, and it's 30 days out. So I'll be curious to see how this works. There might be some overlap. We had one today where it didn't put on, because the system will not put on one if it's going to close down a previous position. So if we run into that issue too often, might have to make some changes. But you can kind of see here, this is also because one of them already turned into a hedge because it was up. We need to fix that. But so this was actually a profit, but we need to tweak that a little bit. So I do have the hedge on, just for the one that's doing it every day of the week, but the other ones I don't have the hedge on. So I'll just show you this here. So I have this running every day of the week, and it's targeting 30 days to expiration. So that's kind of the thought process here. Higher frequency, more instances. So if we have drawdowns, it's hopefully less of an impact. I'm still allocating, it's 3,000 per position, so it's approximately 18,000 total across 6, because I'm doing every day of the week and then every couple weeks, so here you can see it's 90 DTE, 75, 60, 45, and then 30 is now what I've updated it to. So we'll see what happens from that instance. Right now it's not necessarily, I guess I'm technically profitable by $10. I would assume after my fees I'm not right now. But again, I think the max positions I can have on at any given time are 30. So pretty much every day of the month I can have one. So my hope is that it starts to roll off and close down profits each day of the week. And if that's the case, the typical profit target is probably $30 to $50. So it's like if you're making $30 to $50 per day doing nothing, then that is ideal. So this has an open profit. Let's see what this one's target. Yeah, so $43.87. So imagine that this is closing down each day one of these types of positions, and they're kind of stacked up, right? So that is the thesis. And why I'm doing that. It's almost like doing 0 DTE, but you build up to it, because every day a position closes, but it's not because you're doing a 0 DTE position, right? It's because you're doing longer dated ones, getting higher premium, and then they just end up closing down. So that's kind of the thought process there, why I'm approaching it that way. But you can see I would actually just be up if I was doing it on the put side only. Significantly. So the difference is probably about another $3,000 that I've given up by doing this call side. But, until today or yesterday, I was more long the market via the other calls. So that is the update. Bitcoin is, still Bitcoin. It's doing whatever. Bonds in general have been okay, but I've kind of been, whipsawed on bonds. Let's see what the chart shows just for fun, real quick, because I want to be able to, do the typical kind of update. You can see that they're starting to pull back again. I think long-term rates will come down a bit more, but it might be choppy here for a little bit. Again, I still haven't done gold, so that's my own stupidity. Crude oil closed for a profit, I think earlier in the week. So that's still running in general, and it looks like maybe there's a little bit of selling pressure here, but I think we might just be in this range. So again, I'm just going to let it go and leave it trading, and that's where we're at. And in general, I guess for other ones, I might look to do, I've talked about, Google, Reddit, and UHG. I probably will still do something with those. I think Google is probably going to take off here, and maybe I'll be left in the dust. But unfortunately, I didn't just pull the trigger when I was talking about them initially. If you go back and look at when I should have just taken my own advice and taken those positions. But hindsight's always 20/20. But that is pretty much it. Again, appreciate you watching. Check out Options Autopilot, and we do have a webinar coming up next Thursday. So I'm going to be giving a deal for people who want to utilize the platform and going over the one-on-one strategy if you've never kind of heard of it before. But yeah, appreciate it. We'll talk to you guys soon, and hopefully with any luck and a little bit of skill, we'll have some more profits and at least more option strategies to talk about in the future. Have a good weekend.